Welcome to our first Coffee with Samso in 2020. We're here at the Mill Point Bookshop Cafe, here with Ed Turner, doing an update from last time we spoke. I think it must be late last year.
Yep.
Ed, maybe let's start with what's been happening since we last spoke.
Yeah, sure, Noel. I think it was October we last met, and we'd commenced a fairly large drilling program at Menzies. That's our first drilling program since we acquired the project in September last year. So we ended up drilling 8,000 metres, and most of that was diamond core. We really needed the oriented diamond core to figure out the structural controls at Menzies, of the multiple deposits at Menzies, and that was successful. We intersected very high grade mineralisation at all of the 5 deposits we tested, so we're very happy with that outcome. And then we took a few months over the summer to process all that data, interpret it all, and plan follow-up drilling. So we have just gone back to the market and raised another $3.5 million so we can fund a really large drilling program following up on those high-grade deposits from last year, and we're going to commence drilling next week. So we've planned initially another 12,000 metres of drilling, a mix of RC and diamond core drilling, and that will take about the next 4 months, and then we'll review that information after that.
Just so that to recap for the viewers, you've got the or I would say it's a strategic part of the Menzies portfolio, and you've got all these all workings with historical high grades. I'm interested to know, when you said you've followed up, you had a few deposits, I forget how many, and this is showing that your things that at the bottom end are open-ended.
Oh yeah. Just recently we acquired copies of archival data, which was fantastic because the underground channel samples across the development drives from nearly 100 years ago. It's very good quality data. So basically they take channel samples across the ore body every 2 or 3 metres, and so we end up with hundreds of these assays which we weren't aware of previously, and they showed that at the deepest levels of Yundega in particular, the Princess May Shoot at Yundega, and at the bottom of the Lady Shenton deposit, the mineralisation is still very high grade, and so it wasn't all mined out, so it's open at depth, and I'm talking plus 20 grams per tonne. At Yundega is like a 140 metre long run at plus 20 grams per tonne, and at Lady Shenton it wasn't quite as long, but it was plus 20 grams per tonne and even plus 49 grams per tonne over 30 metres. So that's very exciting because it fits in with our interpretation, and we were planning to go back and drill underneath these extensions anyway. Now that gives us a lot more confidence, and if they weren't closed off, there's a good chance some of the other deposits weren't closed off as well. So we will be targeting those depth extensions to those lodes basically.
Because that Menzies area, well, correct me if I'm wrong, but my understanding of Menzies area, as opposed to your neighbour, that Kwikani area, it has historically been high grade, sort of small vein shoots or whatever they may be. So when we first spoke, I said, I like this concept, and it's at the end of the day, it's always about how much money you've got to go and chase this kind of stuff. Yeah,
absolutely. The historic production of more than 800,000 ounces has pretty much all been in the top 200 metres, 200 vertical metres from surface. There was only 20 drill holes deeper than 200 metres before we acquired the project, and I'm talking about over 15 kilometres of strike length. And within that 15 kilometres of strike length, there's multiple shear zones. So there's 2, 3, 4, 5, 6, all within this mineralised corridor. And so really it requires hundreds more deeper drill holes. They don't have to be super deep, but between like 150 metres and maybe even 800 metres, it really needs a lot more drilling, but it has to be smart drilling. So the shear zones go for kilometres, but within there you have shoots which are 100 or 200 metres long, very high grade shoots. And so we had to target those shoots, and that's what we're in the process of doing, and what we'll do a lot more of this year. And then I assume we will be successful in the next 4 months worth of drilling. Then we can go into resource definition drilling in the second half of the year with the money that we just recently raised.
Okay, and there was, if I remember correctly, there was existing resource in the ground, historical stuff, right?
Yeah.
And is this part of that drilling that you're doing around it?
Partly. There's the existing near-surface resource. When we acquired the project, there was 171,000 ounces at 4 locations that was proved up by our predecessors.
Yeah.
Recently we added to that, from the drilling we did last year, we added another 40,000 ounces approximately at one of those deposits.
Yeah.
So now we're over 200,000 ounces. And we know that we can easily expand on those near surface resources, which average about 2 grams per tonne, and we will continue to do that. That's not our main focus. It is the deeper, higher grade and higher profit margin loads, which will be our number one focus. But it's a good point, because at the same time we can be we're investigating doing third-party deals, some sort of profit share arrangement with a company that can come in and mine those near surface resources, and we don't have any capital risk in that case, and they can take the mining risk and the processing risk, and then we can distribute some sort of profit share arrangement.
Yeah.
So that can be happening at the same time, and funding our deeper exploration and advancing those high grade deposits. So that's part of our strategy for this year, and it's an important part of the strategy.
That's quite interesting. Well, it's good, because it's probably the best place to have that kind of strategy, because those third-party groups have a lot of options how they're going to treat the ore, and infrastructure-wise, it's Menzies only stone's throw from Kalgoorlie.
That's right.
And the Goldfields Highway drives straight through your property. I think it's doable. If you were sort of further away, it's a little bit harder.
Yeah, well, they are granted mining leases too. So all of the deposits, we've got at least 10 different prospects which potentially could be exploited by near open cut mining in the short term. So the granted mining leases, you still have to go through the permitting process, but we've got power and water. We're on the highway, like you said. There's numerous processing facilities which would be happy to take high-grade dirt. So there's a lot of options there. But we figure we're not really set up right now for doing that type of mining, where there are specialised companies who could do a better job of that. And so it makes sense for us to do some deals with those sorts of companies who have that expertise while we continue to explore.
I think it's a lot of people don't realise that there are actually a lot of 1-2-man shows out there that do this kind of stuff, and they do make a buck here. And for your likes of a public company, I mean, it makes good sense, right? Yeah,
well, they're a bit bigger than that, but they tend to be private companies, but with their own trucks and their own engineers and surveyors, and the ability to do that mining and the expertise and
the Barmincos as well. Is that that size or?
No, there's be smaller companies than that. I mean, they specialise in underground mining at Barminco, but no. So there's numerous companies that specialise in this shallow open pit mining, and are currently doing it at other locations. So.
And in terms of like, obviously the market is very reactive to this kind of, the results. I don't think I've seen this kind of response for decades. I would just stretch it out, maybe 2 decades. When people put this prospective, nice little results, the share price reacts. I mean, you guys must be happy that you've got something that it's newsworthy and of substance as well.
Yeah, I'm very happy with the timing. I mean, right now, the gold price at record highs, so that really helps us. So there's a lot of interest from investors. You've seen other companies, such as Bellevue and Spectrum with their Penny West discovery, which once again it was very close to an existing open cut mine. Basically, their Penny West is an extension of a known system, so that analogue is very applicable to Menzies, and we could have multiple similar sized deposits at Menzies, and we can quite rapidly develop them, prove them up, go through feasibility studies and be in a position to mine in the short term.
I mean, you mentioned you guys raised 3.5. You had a trading halt, I think, 2 days ago or something, and that's done. 3.5 completed.
Yeah.
I mean, what was the comments from these guys? Are they instos? Are they retailers?
There is a North American insto who also invested in our last capital raise in September, and they they actually increased their position in the company in this capital raise.
Okay.
So that was very encouraging, and then a lot of sophisticated investors as well. You know, a lot from New South Wales and Melbourne as well as Perth.
Yeah. And I'm guessing it's a good market. Was it easily done?
Yeah, it was. You know, I did some roadshow to prepare the market, the investors. But overall, we did that in less than 48 hours. So we were happy with that. We could have raised more, but we prefer to raise more after we get more successful results and get our share price up in the future, so we don't dilute the existing shareholders too much. Yeah.
I sort of emphasise on that because it's sort of like really shows that the market is really, I wouldn't say it's running, booming, but I think they're aware.
Yeah, savvy investors are looking out for projects like ours or companies like ours to invest in, and looking for the next new discovery, and the comments from North America too in particular. Because of the exchange rate and that, they are looking for new gold companies, particularly with high grade, near-term development stories. They're looking for this sort of investment opportunity.
I mean, the Aussie gold price has gone from, I think it was 2140 December, and now we're 2400 this morning.
Wow.
2400 something actually.
Yep.
We're over 1600 US.
Yep.
1608 or something like that. It's really interesting because a lot of people also don't realise that although we have this gold price running, and there is also a supply issue with gold, right? There's actually a lot of these producers are actually running out of their own ore.
Well, there haven't been a lot of new big discoveries, so that's the nature of the industry. So there are times where, it's really an ideal time to be bringing a new development onto the market, basically. Yeah.
Well, I like that the different nature of your projects is the fact that you're high grade, right? I mean, real high grade, the double figures kind of high grade, not the single figures kind of stuff.
Yeah.
And it's very rare, and it's not easy to consolidate as well.
No, exactly. I mean, if we prove up underground resources at 20 grams per tonne, that'll be the second highest grade resource in Australia after Fosterville in Victoria. So we think there's great opportunities there, even if it's 15 grams per tonne. That's still very, very high grade when you consider we can mine underground, narrow vein mine underground down to 4 or 5 gram metres, which is like, so the width of the deposit times the grade is how you get the gram metres. So 1 metre at 5 grams or 1.5 metres at 4 grams is 6 gram metres. So that is economic, and underground operations in West Australia, the larger underground operators are actually mining at lower grades than that right now, although they might be wider deposits. So if we get 20-30 gram metres, then the profit margin is very high.
I mean, I definitely do not profess to know exactly how these things work, but my experience, as I mentioned before, with Silver Lake was that they did really well, and they're still doing really well at Daisy, and they're still at Daisy. It must be, 2007 or 8 they listed, 8 I think they listed, and they're still mining away. So obviously this kind of thing worked. And also I think in the sense that this area if was very fragmented in the old prior to you guys, or the next group, the last group that was there.
Yeah, well, just on that, we've actually added another 6 kilometres of strike length to join up our main block of land, which is about 10 kilometres long, with the Lady Irene tenement further to the north, which is 5 kilometres removed, and we've actually pegged the ground in between. So that's still not granted, but should be granted in the next few months. So now we've got over 15-16 kilometres of strike length.
Contiguous.
Contiguous.
Okay.
And the mineralised corridor sits right in the middle of that, and that's just over 1 kilometre wide, where the multiple shear zones are. And so there is mineralisation outside of that system, of course, but we've got the we've got the heart of it, and very happy with that. That's a package by itself is more than enough for a company of our size to exploit. And then we've also got Goongarrie 40 kilometres to the south, which has a deposit called the Goongarrie Lady, which has undergone a feasibility study in 2018, a positive feasibility study. The gold price then was only $1,700 an ounce Australian, so obviously it's gone up $700 in the interim, so we're rerunning the numbers on that, and that's pretty close to being going into production as well. So that's one of those examples I mentioned where we can do a deal with a third party to exploit that and make a nice little profit on that.
So this is all free milling stuff too, right? You guys?
Yeah, it's coarse gold. It's not tied up in sulphide, so the recovery rates historically are 94, 95%. So there's no problems with the ore.
I mean, in terms of, you look at this in terms of the market and everything else, it sounds like the smart money is coming in, positioning themselves in a market that's about to, I think it will go steady. I really do not wish to see a sharp one like 07, 08, 06. But I think that seems to be the case, right?
I mean, some people are predicting the gold price will go up a lot more. I'm not really sure, but the indications are that it won't slide backwards anytime soon. So now is the time, but to advance these projects and get them into production.
I mean, when we go back to the same thing, I see the way the market's responding to results. I think that whole I've always said that the Goldfields area is still ripe for discovery, and there's a lot of things like the Menzies area where it was there but never really, for whatever reason, no one's really got into it.
Seeing a lot of the other companies north of Kalgoorlie and up even north of Leonora, that whole belt, I was at the Explorers Conference yesterday and talking with those people that run those other companies, and they're very, very active, and they're going flat out right now to prove up as many resource ounces as possible. And there's other locations as well which have been underdone, so they really haven't been drilled out enough at depth. People have been aware of where there is mineralisation at surface, so it's easy to mine the open cuts. But when the gold price was down, they're not economic. Right now, a lot of them are economic. So there's a lot of activity, and so that's encouraging. It's good to see other companies having success as well.
I think it sort of breeds itself. I mean, like Fosterville was the first time when I think the real focus went into this hard rock vein kind of high grade things, and suddenly a few more came out, and I think there's a few of these Victorian ones that are coming up. I think that's helped people to sort of visualise. I mean, some of them were considered to be too hard in the past because people didn't understand the structural controls, and it's quite expensive to do the deep drilling. But what we've seen is with the gold price has gone up a lot in the last few years, and the prices of labour and drilling and things like that haven't necessarily gone up much at all. So you get a lot more bang for your buck right now too, and so you want to take advantage of that. Whereas some of the booms like the pre-GFC, the cost of drilling and labour and everything like that were about similar to what we've got nowadays. And but the gold price was much lower. So the risk reward ratios change basically. I mean, in terms of you touched on cost of operation, cost of labour. Is it where it was when we used to have saying if you saw geologists were heartbeat, you should just grab them? It's not at that point now.
It's getting harder to get graduate geologists and experienced geologists. That's one thing we have noticed in the last few years. So if you get the good geologists, you want to look after them and keep them. That's for sure. You don't want to be losing them to just the higher bidder. But it hasn't gone crazy. It's just been a steady growth. Increase. A more sensible growth than some of the booms of the past. In
terms of like your vision of, let's say, or if obviously Menzies is a good spot. If someone was looking for something like your style again, where would you go and chase?
Good question. I'm not aware of another area like Menzies that's so underdone, so underexplored with such high grades. There might be a few out there that surprise us. You know, you pretty much go to where gold's been produced in the past. As a rule, is the easiest way. But most of those are still, you know, in the hands of larger companies, and so they're pretty hard to get your hands on if you're a small company. So I can't think of anywhere else I'd rather be right now than for. I mean,
it's obvious that it's an sort of low-hanging fruit, easy to do. Infrastructure's good. You know, that's always been sort of the go-to upside for your area. I guess now there's a lot of talk about the Pilbara gold and things like that. But I think it's still quite hard there. You know, you got to build your own mill.
When they make more, you know, when they get more advanced and there's a lot more information coming out there, and they actually really crack the code of how to explore those things with more confidence, that'll be interesting, because that might open up new areas which haven't been looked at before. You know, you see what De Grey's recent results was highly encouraging for that area. So those areas are quite underdone. I don't know enough about those right now to compare them with the Eastern Goldfields. There's a different style of mineralisation, but it's good to see companies making those discoveries in relatively, you know, new areas, underexplored areas.
But that's a good point, actually. I'm glad you brought that up, because that just shows that even though you got a well-drilled out there, a well-known area, these things do pop out. And like for you guys, although people see you as, historically they've done it and they're only chasing extensions, but you can't rule out the fact that you might actually find another lode that's...
Well, that's a very good point, actually. Within our project area, we know where obviously the historic producers are, and we're drilling for extensions to those. But this year we'll also be drilling some of the new targets, which exist in between the known deposits. So, you know, we've got 6-7 pits within a 10-kilometre strike length, but that leaves about 90% of the area in between. It hasn't been effectively drilled as well. So we're in the process of interpreting the detailed aeromagnetic data we got from last year, from the survey we did late last year. And now we're getting a better handle on the structural controls. We can better predict where the best locations are in between the deposits. Because within our area there's over 5,000 historic workings recorded by the Mines Department. So a lot of those are just shallow workings, you know, like a few metres, 2 metres, you know, 10 metres, 20 metres by the prospectors 100 years ago. But they didn't dig the hole if there wasn't any gold there.
Correct.
And you can see these things lining up over, you know, 2, 3, 4 kilometres. So we know that that's a mineralised shear system. We just have to try and predict within that 2 or 3 kilometres where the high grade shoots might be. So we will be devoting some of that drilling dollars to new, you know, targeting these new areas, trying to discover a new shoot which hasn't been exploited at all. And then we might have something like a Lady Shenton, which is nearly 200,000 ounces of historic production at 30 grams per tonne, 32 grams per tonne. There might be multiples of those in those untested areas.
I don't doubt that. I think that's the bits that people forget, is that the folk, when a company like yourself goes out, I'm doing this, they just think that that's all they have, and look, they'll never be able to mine that, it's too deep and all these things. But they don't realise that it's the understanding of structure that's very important. And similar like the Challenger mine in Guala Craton is when we were told that when they did initial open cut, they then was able to see what the structure was doing. And again, employing structural sort of geological interpretation, they were then to vector in on the 1.2 kilometres of mine that was underneath the pit. That they didn't know was there.
It is hard to put all the pieces of the jigsaw puzzle together just with it's almost impossible just with shallow drilling. And so you do need the oriented diamond core, but ideally you get inside the mine. That's what you really learn.
Well, I think that's your biggest advantage, is that you can see those when you do go down, and I'm not sure if you can go right down, but at least you can see what it's doing underground.
We can't access the old underground mines now, but once again we've got the historic data, and the maps and the descriptions and everything like that too, which was largely ignored, you know, during the 90s when they're just drilling the top 100 metres. So we can see which direction the lodes go and what the plunge of the lodes are, and they'll describe, you know, how it varies and pinches and swells and things like that. So we do have that information, and that helps a lot to predict where to go to next.
The all when there's smoke, there's fire kind of thing, and I think that's the key. That's the difference between what you guys have and what you are able to do going forward. But I think that's I like the fact that you were able to raise the good money. You can go chase what you've talked about. You've done the initial drilling. It's proving out to be a nice little story. I thought I liked it from the start, but it back in my mind was about if you guys could sustain the funding.
Yeah.
I mean, you could really kick a few goals here, I think.
Yeah. Well, with the funding, we're very happy, and we can achieve all of our objectives for this year with that amount of funding. And then if we really get the advances we expect to from the drilling, then we'll be ready to do much more detailed resource definition drilling and get into feasibility studies and everything like that by this time next year. So we're very excited about the potential of the project and where we are at this point in time.
As we all know, investing in this kind of games are a hit and miss, and in some ways it works out like a game of statistics, like the casino, I guess. But it looks like you've got most of the ticks to give you the best possible chance of finding something.
Yeah.
I think I like the way you guys are going. I've always liked this, deep stuff and narrow vein, only from the fact that I've worked with those guys at Silver Lake. They sort of gave me the insights to how these things work, But look, Ed, thanks for giving me time.
My pleasure. Noel.
It's great. Maybe great. We'll definitely have hopefully an update after your next drilling program.
Yep. No, there'll be plenty of news over the next few months.
All right, great. Thanks.
Thank you.